Ever wondered about the top 10 ways to invest financially? We're here to turn that curiosity into knowledge. From stocks to real estate, mutual funds to cryptocurrency, we'll detail the pros and cons of each. Stay tuned to learn about these diverse investment options. Kicking off our list is the stock market. Imagine a vibrant and buzzing marketplace where shares of public companies are constantly changing hands. Here are some recommendations to ponder on. 1. Pour your funds into individual stocks of well-established companies with sturdy fundamentals and promising growth potential. 2. Diversify your financial portfolio by investing in exchange-traded funds, ETFs. They map an index or a potpourri of assets and provide exposure to a variety of sectors, commodities, or geographic regions. 3. Think about injecting your cash into the real estate marketplace via real estate investment trusts, REITs, or by acquiring physical properties for rental income or possible value appreciation. 4. You may want to invest in government or corporate bonds for fixed income returns. These are generally perceived as safer than stocks, but provide lower potential returns. 5. Delve into the ever-evolving cryptocurrency market. Well-known options like Bitcoin and present themselves, although they are highly erratic and speculative. 6. Participate in peer-to-peer lending platforms, lending money to individuals or small businesses in exchange for interest payments. 7. Invest in stocks that dispense regular. This can form a steady income stream, complementing potential capital appreciation. 8. Enhance your investment diversity by venturing into precious metals like gold and silver. These are often viewed as a safety net against inflation and economic uncertainty. 9. Consider directing your funds to healthcare or biotech companies. The advancements in medical technology and healthcare persistently fuel growth in these sectors. 10. With sustainability in focus, consider investing in companies engaged in renewable energy, such as solar or wind power. The stock market remains a classic choice for investment, however, it demands knowledge and a tolerance for risk. Next up, bonds. These are essentially IOUs issued by entities like governments or corporations. When you buy a bond, you're lending your money to the issuer for a certain period of time. In return, they commit to pay you a fixed interest rate at regular intervals. This makes bonds a less risky form of investment and a good choice for those seeking steady income over time. They offer a certain degree of predictability, which can be comforting in volatile markets. Bonds can be a safer bet for those looking for a steady return. Third on our list, mutual funds. A popular choice amongst investors, mutual funds offer a way for you to own a slice of a diversified portfolio. You're not alone in this journey, as these funds are managed by professionals. They're the ones navigating the sea of stocks, bonds, and other assets to ensure your investment is well diversified. This means less stress for you and a more balanced portfolio. So if you're looking for a hands-off approach to investing, consider mutual funds. Mutual funds can provide a balanced portfolio with less stress on the individual investor. Coming in at number 4, real estate, a classic yet dynamic arena for investment. Real estate opens doors to potential returns that can be impressive. It's often seen as a stable investment due to the ever-present demand for property. Whether you're buying to resell at a higher price or renting out for a steady cash flow, the opportunities are plentiful. Not to mention, you're investing in something tangible, something you can see and touch. Real estate can offer both tangible assets and potential income through rental. Now, let's talk about peer-to-peer lending. This innovative investment strategy involves lending your money directly to individuals or small businesses through online platforms. Without the traditional banking middleman, you can potentially earn higher returns. However, it's crucial to remember that these loans are unsecured, meaning they're not backed by a borrower's assets. So while peer-to-peer lending can be a lucrative choice, it also carries its own set of risks. This relatively new way of investing can offer high returns but also carries risk. Next on our list, ETFs. Exchange-traded funds, fondly known as ETFs, are a splendid way to invest in a broad market segment or industry without having to cherry-pick individual stocks. Picture these as a basket of investments that track an index, sector, or commodity. With ETFs, you get the advantage of diversification, similar to mutual funds, but with the added flexibility of being traded like stocks. This means you can buy and sell them throughout the day. ETFs offer diversity, flexibility, and are easily traded. At number 8, we have cryptocurrency. This digital asset is built on blockchain technology and holds the promise of a future where transactions are decentralized and transparent. However, it's not without its risks. The volatility of cryptocurrency markets is well known, with values that can skyrocket or plummet unpredictably. But with this high risk comes high reward. Early adopters of Bitcoin, for example, saw exponential growth in their investments. So if you're adventurous and can stomach the uncertainty, cryptocurrency is a high-risk choice but has potential for huge gains. Coming in at number 9, gold and precious metals. These timeless treasures have been coveted since the dawn of civilization. Their value endures, unaffected by the ebb and flow of conventional markets. You see, when economies wobble, gold and precious metals often shine, acting as a hedge against inflation. They are the silent guardians, the financial superheroes providing a safety net in a world often rocked by uncertainty. Investing in gold and other precious metals can provide a safety net in uncertain times. Last but not least, starting your own business. As an entrepreneur, the world is your oyster. You have the potential to create something truly unique, something that could change the world, or at least a small part of it. However, remember that with great potential comes high risk. You'll be putting time, money, and heart into your venture, and success is not guaranteed. But don't let that deter you. Starting your own business can be a fulfilling and lucrative investment, if you're willing to take the risk. To recap, we've covered the top 10 ways to invest financially, from the stock market and bonds, to mutual funds and real estate, peer-to-peer lending, ETFs, cryptocurrency, precious metals, and starting your own business. Remember, the best investment is the one that aligns with your financial goals and risk tolerance. Happy investing!